welcome to another episode of Small Talk. I'm Joe Garner, Director of Research and Portfolio Manager here with Emerald. Today I'm joined by Dr. Nathan Jones, our Director of Technology Research and Associate Portfolio Manager. Nate, welcome to the show.
Thank you.
As many of our viewers know, on this show, this is where the ideas are big, but the market caps are small. So we like to host one of our members of our investment research team here to talk about some of the things that they're seeing from the field level research they're doing in the industries and sectors they're covering, and how that may be affecting our portfolio strategy and how we're looking at the marketplace. So, Nate, we're coming out of the Q2 earnings season, and it was a particularly interesting one. According to our friends at Fury Research, this was the first time in 10 quarters that we had positive earnings growth for the Russell 2000 portion of the marketplace. When these trends tend to turn, they often stay positive for a little while. We'll see on that, but it was interesting that we saw that positive inflection there. And one of the reasons to talk to you about this, if I look at where the strongest sectors were that were driving that turn, the two strongest ones that came up this quarter were technology and communication services, and probably some similar drivers that were driving both. Not only did we have strong earnings growth there, but we had a relatively high percentage of companies that were meeting or exceeding expectations. So you lived it. As you went through this quarter, what was driving that growth? What was kind of some of the underlying trends and themes that caused this to happen?
Yeah, it's a great question. I mean, I think it was, to your point, 70% beat on EPS and 75% beat on sales across the small cap tech universe and telecom services. And, really, you just got to look what the spending is like environment with a lot of the large and mega caps. The capital expenditure environment continues to accelerate. And a lot of that has been very focused amongst AI infrastructure and semiconductors benefiting from that, and infrastructure hardware benefiting from that. So that's where we generally saw the largest upward revisions was within that universe. Even some pockets of strength in software, although less so, and we can get into that a little more granularity in a minute. But yeah, it was pretty broad based across the semi and infrastructure space, and even some areas that have been notable laggards were starting to recover.
Yeah, that the area of AI infrastructure spending is something we've been hearing more and more about recently, and we've been hearing about the hyperscalers who've been boosting their CapEx budgets to be able to deploy these large language models and other AI infrastructure services that they're attempting to provide to the marketplace. Where do you think we are in this cycle of spend? Are we in the early innings, the middle innings, the late innings? Where do you think we are?
Yeah, when you hear about the kind of budgets and hundreds of billions of dollars that are being spent, it'd be tempted to think that this is near the top or can't sustain much longer. But we are, I think, scratching the surface in terms of where we can go with this spending environment. And it's not just the hyperscalers who continue to upwardly revise their projections for capital spending, and they see this as an arms race that will lead to trillion-dollar business models in the future. So the capital intensity is something they are more than willing to sustain to stay out at the bleeding edge of this. But I think what you're starting to see in general, or on the other side of that, is you're seeing expansion into a lot of neo clouds and AI, like purpose-built AI data center companies come out. There was a notable IPO earlier in the year, CoreWeave, that came out, and they we're kind of the first of its kind. I expect to see more of that, but the spending by these guys is growing even faster from a base, and they're starting to become meaningful. And this isn't just happening in the U.S. It's happening in Europe. It's happening in Asia. And so you have all this incremental spend on top of what you're seeing from the hundreds of billions of dollars coming from the hyperscalers. You're starting to see tens and tens of billions of dollars coming from these other sources. And the large enterprises around the world are starting to invest in their own in-house AI infrastructure initiatives, as well as governments around the world starting to get into sovereign AI. And the processing power is just getting stronger than the current technology cycle from NVIDIA is in an early stage of adoption, but they're already lining up for later in 26, the next pathway, and then later in 27, the pathway after that in terms of the processors and their capabilities. And so really this is, if you think of early days of Intel and the original build out of enterprise data centers and then the cloud, there was such a long runway to those builds, and we think this is even stronger, from a longevity perspective and a necessary speed perspective because of how fast these things are happening and how quickly the technology is changing. So there's a major imperative to stay out on the leading edge of this growth curve.
That's certainly been one of the stronger secular themes in the market. Back at Groundhog Day, you were pointing to it might be time to start looking at some of these cyclical themes in the areas like industrial tech or some of the more cyclical portions of the tech industry. Where do you think things stand there? And when we've got this large, big, beautiful bill that passed here recently, does that impact that theme at all?
Yeah, I think what you're starting to see there is, specifically that was one of my top ideas, was that we would see those cyclical recoveries taking a couple quarters longer than maybe I would have initially expected. But I think, you're starting to see industrial technology companies, industrial focused semiconductor companies starting to see that recovery and spend. And a lot of that's going to be driven, to your point, by onshoring and renewed focus on domestic manufacturing and the incremental investments that need to be made in order to get that up and running. In addition to just, there was 8 to 10 quarters of inventory correction and overbuild that happened post COVID, and this is a normalization plus a cyclical recovery, normalization of inventory, and a secular recovery, kind of or secular trend continuation, all happening simultaneously. So we think there's likely going to be legs to this. There are some areas that haven't started the recovery. I do think industrial, robotics, automation, defense electronics, a lot of these industrial areas have shown a lot of strength, and there are a number of small cap ways to play those recoveries and the continued secular electrification in those areas. But you're maybe seeing some green shoots in automotive, which has been down for a prolonged period, and maybe starting to see some green shoots in consumer electronic type devices. And really, so you could potentially have all of the areas of the semiconductor universe trending together in a cyclical recovery. And obviously, we'll look for the best secular growth opportunities within each of those sub-segments of the semi industry. So I think, and really, I think just getting back to the first point I made on software, there's opportunities there too. It's been notably weaker in the small cap universe, but cybersecurity remains a good secular area of spend. Infrastructure software remains a good area of spend. There is some pause, I think, and deliberation with generative AI and how that will impact maybe middleware focused companies and maybe some other areas that can be somewhat commoditized by self-writing code, AI related code. And so we're still trying to figure out a little bit of those dynamics in terms of the longer term impact on the tech sector, on the software piece. But there are still secular themes to play even within software, despite some of the consternation that some of the spending managers might have and knowing what to invest in at the moment.
Very good. All right, I got one last question for you, and I'm going to ask you for a soundbite as a teaser, because I think we're going to come back and maybe have an entire episode on this topic alone. One of the areas we're starting to hear more and more about in tech is this whole area of quantum computing as a new paradigm for computing. Real or not real?
Yeah, I think it's very real. I think it's very early. And I think you're going to see this as an arms race, and an early stage arms race. And you're going to see it from within large companies like IBM, Google, Honeywell. And these companies have their own quantum initiatives, but you're also seeing several public companies that have come to market over the last few years. And there's a lot of government spend going towards this. There's a lot of enterprise spend at the large enterprise level that's just starting to develop. It's very much in R&D phase, but this is a completely transformational set of technologies. We're still trying to figure out what modalities may or may not win. There's different approaches to how people are trying to do quantum computing, but it is a transformational change in the way computation is done, and how much faster and how much more useful analytics and insight we can get from compute. And so there's nothing analogous that we can point to in terms of this transition, because it is entirely new area of compute. And so I do think we're going to see that initial spend kind of more R&D focused, and project based, and proving out the concepts of what the capabilities are. But that is still a lot of dollars that can come flowing into space, and these companies have had no trouble raising large amount of capital to kind of pursue the differentiation of their own strategy to see which is going to end up being the best. And I do think you're going to see that government spend be a notable area of strength for these companies and some of the leading edge enterprises.
Terrific. Well, Nate, I want to thank you for being here with us on Small Talk today. A lot of interesting insights, certainly a lot of exciting stuff going on in the tech world currently.
Yeah.
All right, we want to thank our our viewers as well. We appreciate you being back here with us, and please check out our website, teamemerald.com, for other episodes of Small Talk and other great content from our investment team. Thanks, everybody.